first week of 2023. How are things looking to you? Are they looking a little sort of iffy? We've seen markets being flat here on the Nifty at least for the last 2 months, whereas some of the big underperformers globally have done well. What's your sense from here?
Yeah, I think fundamentally we need to understand and probably introspect that is there a structural valuation reset which is happening in the ecosystem, and this is primarily driven by the inflation and the interest rates which are hardening overseas and which continue to expected that they will further harden, and plus what is happening in terms of quantitative tightening which is continuing and which will continue for some time. So I think there is the 2010 to 2021 phase where we had continuously interest rates going down and because of that valuations moved up. So I think that is a fundamental question that investors need to grapple with, is that are we getting into a phase where valuation multiples for most companies have to be reset accordingly. I think that is something which is most important to worry about. As far as yes, there has been volatility in the markets in the last few weeks and last 1 week also, and that is primarily driven by the FPI selling, and which is again a function of our markets being possibly overvalued versus other emerging markets, and maybe it is expected that other emerging markets like China, etc., could attract more flows than what our markets will attract. So I think that is the phase that we are going in, and in fact the bellwether NBFC yesterday corrected by some 7-8%. Now it was a marginal miss in expected AUM growth, etc., and you saw a big correction. Now this is something which is a cause for concern, which means that stocks which are priced to perfection or which are relatively overvalued for the high growth that they were showing, and now when growth is possibly, so maybe others are also able to show similar kind of growth, then investors are willing to bail out of such stocks. If the stock doesn't correct and come back again, then again it will play into my understanding that we are getting into a structural change in the ecosystem where highly valued stocks will get corrected significantly.
Mr. Karwa, good morning. Thank you very much. Now, the balance of your arguments seem to suggest that you would bet on the market falling a bit more, at least in the first half of the current year. Is that
Latha, your voice is cracking. If you could please repeat your question. Okay. I didn't get the gist of it.
Sorry. Okay, I hope this is better. Are you expecting markets to fall in the first half of this year? Not helping, I think Nigel.
Sorry,
I don't know whether it's...
All right, Mr. Karwa. Yeah, all right, Mr. Karwa, I hope I'm audible. Nigel on this side.
No,
yeah, I can, yeah.
All right, Mr. Karwa, you know, just to push through what Latha was asking about.
Okay, it's not working. We'll do one thing, we'll redial.
Yeah, we'll just try to...
not working.
We'll just try to fix that. By the way, the markets have moved into the red as we speak. We're down close to around 15 points. There's another Wadia Group company, National Peroxide. We don't talk about the stock very, very often, but there's a large trade that's taken place out there. Close to around 10 lakh shares have traded. It's a 1,500 rupee stock. So, you know, that one, in fact, is up close to around 3% as we speak. So, just one of the notable movers out there. It's up close to 4% as we speak. Not very high volumes normally, but today, in fact, we're seeing a bit of an uptake out there. Besides that, well, the markets are more or less quietish. The Nifty Bank, for the second day running, it's down. But is it providing an entry opportunity? It's down 150 points. It's recovered a little bit from the day's low. And Bajaj Finserv is the one that's one of the big losers on the index. Second day running. Some of these names that actually have done very, very well, the Bajaj twins, they have come in for a bit of selling as we speak.
I think we have to keep our eyes locked on the HDFC twins. On a day when the Nifty Bank is not doing too well and, you know, you're seeing finance stocks under a bit of a challenge for the past few days, HDFC Bank has actually been putting its hand up. They reported excellent deposit growth. You know, everybody's reported good loan growth, but HDFC Bank's deposit growth was standout, 20% deposit growth. Everybody else came in single digits. So perhaps somebody is taking note that they will have cheaper sources of finance. unlike NBFCs like Bajaj Finance, and maybe that comparison is working in favour.
That is a problem for. I mean, it's great news for HDFC Bank, but for companies like Bajaj Finance is used to grow at 40%. I mean, from FY11 or so, all the way till about right before COVID, right? I mean, it grew at 40, 45, 50%. Yeah. And now you're basically, growth rates are converging, both loan growth and profit growth.
You know, there are a couple of things.
I was looking at FY23 and FY24 estimates. Yeah. HDFC Bank versus Bajaj Finance. And actually, it is very close. I mean, there's a difference of about 200-300 basis points, where Bajaj Finance is higher by that much. But valuations, I was looking at FY24 price to book multiple for Bajaj Finance, still at 6.6 times.
Exactly.
Right? Which is, and its average for the last 15 years is about 4.5 times. And of course, you know, HDFC Bank is nowhere close. That's a so it's a real trade-off.
Yeah, and actually, you know, everybody is in the retail game. Nobody is lending to, you know, infrastructure or corporate. So that way, Bajaj Finance
competition is much higher now.
Much higher for companies like Bajaj Finance. Anyway, we'll discuss that again with even Mr. Karwa as soon as we are getting that line in order. But we have some updates coming on Macrotech, Lodha Builders. Sonal has more on that. Sonal, tell us.
Well, yes, the Q3 operational update of these real estate companies have started trickling in. And for Lodha, it looks like a good set this time around. In terms of bookings, the number has come in at 3,035 crore rupees, which is an increase on a YOY basis. There's a slight decline on a quarter-on-quarter basis. Collections, though, have increased both on a YOY and on a quarter-on-quarter basis, coming in at 2,700 crore rupees. Their net debt also has reduced. It is coming in at 8,042 crore rupees. The company has a target to reduce debt to levels of 6,000 crore rupees. That is by FY23. For 9 months also, the company has done well. Pre-sales are up 62% and collections are up 33.5%. And the 9-month bookings also include 600 crore rupees in terms of projects where the company is a development manager. And for 9 months, the company has been able to surpass the FY22 bookings as well at 9,039 crore rupees. Collections almost there at 7,673 crore rupees. The company now says that they are on track to surpass the pre-sales guidance of 11,500 crore rupees that they had given earlier. They also added 5 new projects with a gross development value of around 8,500 crore rupees. 4 new projects with an area of 5 million square feet. They've already done gross development of around 17,800 crore rupees so far in this financial year, which is higher than their target of 15,000 crore rupees. So yes, this is definitely a good operational update coming in from Lodha.
Okay, that you know, that 11,500 always looked like a target they would beat. Thank you very much, Sonal. And we have fixed the line with Mr. Krishna Kumar Karwa. Mr. Karwa, what I was asking you is, you know, the way you're preparing us in terms of being cautious about high valuations, are you expecting a market fall, at least in the first half of this year? Are we any better off? Yeah, you are, Mr. Karwa. You're not able to hear us?
Can you repeat the question, please?
Yeah, why don't you? Prashant, yeah, you have been lucky.
Can you hear me, sir? Mr. Karwa?
Yeah, I can. Yeah, I can. Thank you.
Okay. It seems like I'm the only one.
Yeah, good. Go ahead.
Getting through. So, Mr. Karwa, no, Latha was asking whether are you expecting a fall in the first half for the market here, and what kind of a fall, if so?
See, I think it's very difficult to answer that question in a yes and no. I think there are 2 parts to it. As far as the flows are concerned, if you look at it, so far the domestic flows have been very, very robust. And I believe that the SIP flows, which are say 12 to 14,000 crores a month, that will continue to be robust with not too many changes over there. So at least the domestic flow seems to be robust. Now the question is all about the FPI flows. And it's very difficult to fathom how FPI flows will behave. So you will have these bouts of FPI selling, what we are witnessing now, and primarily that will impact your large cap stocks where their flows are very, I mean, normally FPI selling is much more in those segments. So that's one way to look at it. The other way to look at it is that of fundamentals. Now, markets are like kind of priced to perfection. Earnings estimates for beginning of 2022 and now beginning of 24. I think there have not been much 23. There has not been any substantial cuts in earnings estimates. So we have not yet factored in any cuts in earnings estimates for 24. Now if that happens, which could be a function of how our economy works in the light of the global volatility. So that could drive, if there are some earning cuts, then yes, there could be some sharp corrections. So it's a difficult question to answer, but volatility is given, and that's the reason I believe that if the environment is going to be so volatile, then you cannot give a high multiple or you cannot hold expensive stocks in your portfolio. And there can be a significant reset downwards as far as multiples that you give to the various stocks that you own.
Okay, let me try my luck again, Mr. Karwa. Do you think we should bet on the capex cycle? We have seen some upgrades coming for stocks like ABB. So would you bet on capital goods now?
I'm sorry, Latha, I think...
No, sorry, I'm sorry.
I'm struggling to hear your question.
All right, Mr. Karwa, we'll leave it there. Apologies for the poor line. We'll have you back with a proper fixed line. Thank you very much for joining us. Appreciate it. Well, Mark Mobius is now joining us. Needs no